Hello everyone, welcome to Accounting with John. My name is John, and for today's topic, we will talk about the accounting equation, which is probably your first subject in accounting. So let's start. We have three main ideas in this video. First of all, if we are going to talk about accounting equation meaning, the second is about the example case that we will do it together, and the third is the key point that you can use in your school or university. Okay, so first of all, the meaning. To put it simple, accounting equation means asset equals liability plus owner's equity. But why? Well, asset is a resource that owned by business and it contains the right for claim from two different entities. The right from the creditor, which we will call as a liability here, and also the right from the owner of the business, which we will call by owner's equity or just equity. The, the cause of this is because of the concept called business entity concept. And business entity concept means that you, as an owner of a business, is a separate entity with your own business. So the asset that your business owns is not technically your asset, and your own assets, such as your house or your own liability, such as your mortgage, doesn't affect your business at all. It's a different kind of entity. So that is why we have asset equals liability plus owner's equity as an accounting equation. Now, this is the example of some cases that we will do together. We have 5 different examples here, and we will play a role here. I can say we play a role as Mr. David, who owned the David Corp. So after this, we will talk about this step by step for each example. So if you want now, you can pause the video and take a screenshot so we can review the example later. Okay, so now this is the normally used template for accounting equation. This is a common template for accounting equation. We have the big column here for asset, which the left side is the asset side, and equals liability plus owner's equity, which is on the right side. And for this blue row, this is where we will put our account's name. So every time there is a new account, for each cases, we will write the account name in following the specific classification for each column. So let's say cash is an asset, so it will be put here on the asset column. And this green column is a number column, which will I use to number the answer for each case and example. You don't need to use this column if you're in school or university project. This is just to make it easier for me to explain. Okay, well, now let's start with the first example. Here we have David, which sent his own cash to David Corp. So David Corp received cash, and it also increased the owner's equity to David Corp itself. So in this first case, David sent cash to David Corp as an initial deposit, you can say initial deposit. And so the cash, we create the cash account here on the asset column, which has the amount of $25,000. And also on the right side, we record David equity in owner's equity with the same amount of $25,000. So the main key of accounting equation is to make the left side or the asset side here always equal to the right side here, which is liability and owner's equity. This is the key point of accounting equation. This is what you should always paying attention for every case of accounting equation. Now, so let's move on. Now, in the second case, David Corp needs to pay some expense. On the example, we have a rent expense, a utilities expense, and also wages for the labor, and we pay it with cash. In the second case, we pay it with cash, so that means it will reduce our cash with the sum of the amount of all the expense here. And so with our the important thing is that we need to make left side and right side always balanced. So if cash is reduced this much, then we also need to reduce the owner's equity. That is why we record the expense here. So this is an important note that every time there is a new account on the expense, you may want to record as a new column, though except if it's on the same nature. So if there is a new expense here, you want to write it down here. But if there is another expense that already exists, let's say that you pay another utilities, then you can write it down here. Okay. Okay, now we have David Corp buying supplies, but not in cash. So the payment is later. So that means they have liabilities to its creditor. So at asset side, we record that David Corp will have an increase in their supplies. So we add a column of supplies and record $500 of increase of supplies. And to make it equal on the right side, we need to record the credit and or the liability that David Corp make for the supplies. So we add the column for accounts payable in liability section and increase $500. Okay, so you need to pay attention especially if your school or university still use paper to make accounting equation balance. You may want to have more space between liabilities and owner's equity, or you have some spare space to record more asset because you may want to add another account in specific section. So it's always a good thing to look for all the cases first, so you can try to make a guess of how much account that you will need to make. Okay, now for the fourth example, we will talk a bit about adjustment. So let's say Mr. David on the end of the month, he tried to look for his supplies and he determined that the supplies is no longer at 500 value. It's on 100 value for the supplies. So imagine it like this, that you have 10 pen from the starting of the month, and at the end of the month when you check it again, you realize that you only have one pen that's still working, that still have an ink inside of it. So big so accounting equation needs to record in its actual state. So that's why if we know, like in this case, the supply that is remaining is $100 in value, so we need to reduce for previously it's recorded as $500 worth of supply to $100 of supplies. I will write it here. So you need to make it to $100 worth of supply. That is why we record it with minus 400 here on supplies. And we also noted it as a supplies expense here that reduce its owner's equity. So you don't always need to follow the value or the number that in the case. Sometimes it's only a tricky part of the case. In this example, you need to record minus 400, not 100 like in the example on the case. Okay. Now for the fifth case, we have David Corp here obtain his first order, and David Corp wants to record their revenue. So every time a company receives a revenue, they recorded it as either a fees earned if it's a service or a sales if it's for selling things. So in this case, you might want to see first what is David Corp doing, but since I didn't put any explanation about it, so I will just make an assumption that is a service revenue here. And since it's the payment for the revenue is received in cash, we will note it as an increase in cash and also an increase in revenue here, which is on the column of fees earned on owner's equity side. We still make things balance between the left side and the right side, and that is what is important. So in the end, we will have an ending balance for each account right here. And if we sum the assets and with the liabilities and the owner's equity, they should be balanced. So the assets should be equal with the liabilities plus owner's equity. Now, several things to keep in your mind is that like what we always say along this video is to make the left side or the asset side always equal with the right side, which is liability plus equity side. Now, the tricky part maybe is in owner's equity transaction that can include several things. This is the breakdown of some of the common owner's equity transaction, which is revenue, like what we just did earlier. It increase equity, so it will have a plus normal value. And for the expense, it will decrease the equity, so you need to record it as a minus to your owner's equity. Owner's deposit is like the first initial deposit that Mr. David did is an increase in equity, so it needs to be plus in value. And owner's withdrawal, we didn't do this example, but it's kind of the same like expand. It decreased the equity from the owners, so it will have a minus value in your owner's equity column. Okay, well, that's all for today's topic. Please subscribe if you're interested for some more video about accounting, and ring the bell to get notification for the newest video. Thank you very much. Goodbye.